G'day there, investorholics and friends. Today we're going to talk about clean energy ETFs. Today's ETF is CLNE, which is the VanEck Vectors, a global clean energy ETF. So hopefully you haven't been living under a rock, and if you haven't been living under a rock, you know that the global energy revolution is here. Clean energy is set to become the world's main source of power within the next 30 years. It's already on the up and up. Global consumption of renewable energy increased by more than 350% in the last decade. CLNE holds a diversified mix of companies focused on clean energy production, clean energy equipment, and clean energy technology businesses. So I think this one is, an ETF that you could hold for the next 20 years easily, I think. Yeah, obviously, keeping in mind that the actual companies inside this ETF have to perform because we all want to make money. But I think it's one of those ones that has quite a substantial runway up, as in building equity for the investors. So stick around, guys. I think this one would be very informational and add some value to your ETF investing and investment search. Hey there, investorholics. This is Scott. Crack the Sky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. Okay, so CLNE gives investors exposure to a diversified portfolio of 30 of the largest and most liquid companies involved in clean energy production, associated technology and equipment globally. Let's have a quick look at the index description here. So the index is the S&P Global Clean Energy Select Index, and it measures the performance of 30 of the largest, most liquid companies with businesses related to clean energy production, technology and equipment from both developed and emerging markets. Let's have a quick look at the why factor, as in why on earth would we bother investing with this ETF. So it gives us long-term growth opportunity, as I kind of touched on in the beginning there. An investment in the global energy supply of the future, which is transitioning to infinite clean energy away from finite non-renewable sources. So it gives us targeted exposure to 30 of the largest global companies involved in production of clean energy. And as always with ETFs, we're looking for diversification. So diversified portfolio across countries and companies, which offers opportunity across a range of sectors. So yeah, I think this one's definitely one to keep an eye on. So let's quickly skip through to the next slide. Okay, we're looking at net asset value here of $8.61. Last traded above the net asset value at $8.78. That key factor there to me tells me it's not a buy right now. We're not going to be paying 17 cents above what the net asset values of the underlying companies are. Market cap of $38 million. We've got a management cost of 0.65%. You receive a distribution annually in January or thereabouts. Dividend yield, I'm not entirely sure, as this ETF is quite new. So percentage assets in the top 10% of holdings is 45.65%. We've got a PE ratio for the last 12 months of 31.9, which is kind of pushing the higher side. We've got a book value of 3.62, which is pushing the higher side as well. So CLNE gives the investor direct access to companies that are transitioning to the clean energy and focusing on climate change, which is one of the world's most important global megatrend and represents a long-term growth opportunity. I mean, that's really what we should be looking for long-term growth, so we can invest our money now and watch it grow over time. And I think these kind of renewable energy ESG type investments will actually prove to be quite lucrative over the long term. So you get exposure to companies that are in solar energy, wind, hydroelectricity, biomass, biofuel, and geothermal energy. So it's pretty much that covers the whole suite of pretty much energy sources going to be powering the world, from 2040, 2050 onwards. So with targeted exposure to the largest global companies in the clean energy sector, CLNE provides the investor access to the megatrend with long-term opportunities as the world transitions away from climate change. Tries to limit climate change and sort of transition away from the dirty fossil fuels, I should say. So yeah, just go back. It's definitely is trading 70 cents above net asset value. So right now, for me, the fact that it's trading that high above its net asset value, it's just a watch at the moment. So while we're watching, we can go and actually have a look at some of the other ETFs here. I've selected ERTH, ESGI, or E200. They're all good alternatives for investing sort of ESG type, clean energy type situations. Okay, there's limited information for this one. As I said, it's really only been active for a couple of months, so there's not really much information, graphs and all that type of stuff performance wise. So you can see there on the right hand side a quick overview of the top 10 companies. Never heard of any of those, to be quite honest. So the majority of these companies are pretty much, high percentage of them are actually out of the United States, and then you kind of get a mixture of the rest of the world covered. So as you can see there on the right hand side, there's not a lot of performance history information. What we can see is since its listing a couple of months ago, performance wise, it's been so it's sort of tracked it, it's up 1.73%. So not shooting the lights out, but it's only been running a couple of months. So I think touch on some broad key factors driving renewable energy take-up, I think might be interesting. So the cost of renewable power has been rapidly reducing over the last decade, and that's driven by economics of scale, technological improvements, and increasingly competitive supply chains. Almost 200 countries have ratified the Paris Agreement, with the main aim to go net zero emissions by 2050. So, if you've got 200 countries saying they're going to be net zero by 2050, and that sort of gives private companies the confidence to start investing and building these type of projects to get there. Demand for action on climate change is another thing, and also access to clean energy from the public has surged in the last few years. So people want action and they want access to clean energy sources. Also, this one's a bit further off, but there is actually a finite amount of fossil fuels. Current estimates, really, fossil fuels will be depleted in 140 years. We'll all be dead by then, but I think it's sort of something that we need to be transitioning away from sooner rather than later. Otherwise, our planet won't be inhabitable. But having said that, I think the transition is a wealth creation opportunity as well for those people who are actually prepared to invest So I think it's definitely one of those ones to keep an eye on. But as I kind of mentioned before, when we're trading above when the shares are trading above the net asset value price, it's not really a good time to invest. So one to put in the watch list, and hopefully we see a drop in the share price or an increase in the underlying assets, and then once we're looking at share price parity, or even better, if it's trading below the net asset value, then that's a good time to get in. Anyway, hopefully this quick overview of this very new shiny ETF onto the Australian market was interesting and helpful. As always, make sure we're doing our research, and pretty much this is not an endorsement to buy, but all the disclaimers are at the end of the video anyway. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.